Welcome back to Wall Street Confidential. I'm Deborah Borcha. I'm talking with Jim Cramer, and we're looking at Caterpillar, which apparently is a very misunderstood story.
Right.
So, Jim, what's misunderstood about it?
Well, I think the company made you misunderstood. The company was predicting. A lot of people were saying they predicted a recession. Well, yeah, okay. But what they also predicted was a quick end to the recession, and that discussion ended yesterday.
Clearly isn't going to happen.
What bothers me tremendously is that Caterpillar was way too optimistic about the second half of the year. I don't know why they were so optimistic. They just kept saying that they would be because of stimulus.
Well, everybody in the market was saying, oh, mid-year, this is all going to be over. We're going to start booming back up.
The steel companies didn't say it. I mean, a lot of companies that have been, the companies that have been saying that 2009 is a bad year are doing better right now than the companies that are saying that 2009 might be an up year. That's a very important lesson. Caterpillar was saying that we'll have a hockey stick at the end of the year. That was dead wrong. So what you're seeing is the companies that were saying that things could get better are being clobbered. The companies that were saying things could get worse are being bid up, okay?
Because they were more realistic as to what was
and
the
took
situation
action.
And weren't overly optimistic.
Exactly.
Okay.
Now, the good news is that Caterpillar, even with reduced earnings estimates, it can still cover the dividend, which is why the stock bottomed, okay? The bad news is that I can't think of a reason to buy it other than the dividend. And that's a reason enough if you believe that the stimulus in China and the U.S. is for real. Because the basis of the stimulus is to go buy Caterpillar equipment. So you kind of have a buying opportunity. Now, I was hoping it would be at 30. I do not own it fractionalertsplus.com. But I am very tempted. If I saw the Congress really move aggressively, I certainly see the Baltic Freight Index in China going up. This would be the play now that everybody's washed out. The way I recommended buying this, and again, I'm widely criticized for saying just go buy CAT. I have said over and over again, you buy it at 4, then you buy a quarter of it at 4, you buy a quarter of it at 4.5, buy a quarter of it at 5. We've now bought 3/4 of the CAT position. That may be fine. Maybe that's all you have to buy. But I want to emphasize that Caterpillar screwed up here. And it's not our fault. It was CAT's fault. They were too rose-colored glasses, and they got punished.
Okay, and the dividend we feel is
I feel good about the dividend. Now, remember, only Freeport has completely blown us up in the dividend, and that was because Freeport spent so much money to buy Phelps Dodge. Dow Chemical is going to blow us up because the company was just had wild eyes and needed the Kuwait number. GE, where I work for, has drawn a line in the sand on the dividend, which is never a smart move because the board should consider the dividend quarter to quarter. But I feel good about CAT's dividend now.
So
I don't want to be like these analysts.
This market really needs this infrastructure strategy from our government because so many bets are being made on it.
Go back to what I'm doing for fractionalertsplus.com. I'm not betting on the stimulus at all.
Okay.
I mean, it's General Mills, it's Unilever, it's Procter & Gamble, it's Pepsi, it's Bristol Myers, it's J&J, it's Celgene, it's Gilead. These are saying that the stimulus is going to fail.
Okay.
I'm just saying that there's room in any portfolio for a diversified approach, a gold stock and industrial. Gold stock says that they reignite inflation. I don't believe it, but I never mind hedge.
Okay.
And an industrial on maybe that the infrastructure package succeeds, and that's CAT, not Fluor.
Great. Okay? Thank you, Jim. Deborah here. Stay tuned for more at thestreet.com TV.